Hello, my YouTube friends. Happy Tuesday. Today is September 9th. My name is Adam Kahn, and this is Investing with Adam K. Well, United Healthcare is shooting higher, or screaming higher, so to speak. Apple did their presentation of the new iPhone, and I got to tell you, it was a little lackluster as far as I'm concerned. And then on top of it, economy seems to be slowing down according to Jamie Dimon, which I think is good information, but market seems to be handling that just fine. So stick around. Those are the three things I'm going to discuss in today's video. Well, at this point, I don't have such an easy time just banging my hands on the table, but I really thought United Healthcare was undervalued. I still think it's probably the best bargain on the market, but considering the run up that it's had over the past few days and even the past few weeks, it's hard for me to push it and say it's time to buy the way I was before, just because I'd be concerned that there could be a pullback. At the same time, remember, the stock fell from over $600 a share. So even at 350 after today's rally, to me it seems still highly discounted. You still have the Department of Justice weighing on it, but the news was basically that business is as usual and things are going well. They have a new CEO in place. It's somebody who did well for a very long time for them, and I think the opportunity when it fell to under $250 a share was just an unbelievable opportunity. I still think the stock is fairly valued where it is now because they still make over $16 a share. So at $350 at the pace that they're growing and the dividend being the dividend being a decent dividend, that they don't use a ton of their income to be able to pay it, and growing at the rate that it's growing, I think there's ability for it to continue to grow. Now, as stated, I do think the stock continues to go higher, but I also think there's a potential for it to have a pullback. That was such a big run in such a short amount of time. The way the market's been, though, it's hard to guess. And I'm not trying to be difficult. I know people are looking for advice and suggestions on the way the market goes, but you know, this is why I make the disclaimer that you need to do your own research, and this is not investment advice. By all means, like, nobody knows which way a market is going or what a stock is going to do. We have our best guesses and we talk about that, but you need to use all of this as entertainment purposes only. I'm not a financial advisor, and I don't think you should be listening to me or anybody on YouTube for making financial decisions, which is why you need to do your own research. It's just long term, I think that United Health is still a bargain here, but I think short term things can go either direction. You know, I was watching somebody beat somebody else up. Oh, it was Joseph Carlson that they've been really beating him up on Duolingo. And to be fair, I've bought it as well. I watched his video on it. I've had my own thoughts on it. I hate the app. Like, honestly, I tried using it for a bit. I unsubscribed in under 24 hours. Separate issue. But I understand that the company is growing at a rapid rate. Meanwhile, the stock price has dropped pretty precipitously. Well, nothing has changed in the company, which doesn't change the investment objective. Me personally, I bought more shares than I should have, but not really because the market fell. When I'm looking at stocks that I think are like, hopes and not really ones that are like a Procter and Gamble, Coca-Cola, companies that are pretty stable, pretty big, been around a long time, that you're not going to have a ton of growth, but you shouldn't have big surprises either. The investments in those, in my personal opinion, should be rather small, in the hopes that you have really good gains on some of them and some of them don't work out the way you do. And to beat somebody up on YouTube because their pick didn't do so great, like, it happens. I'm not really sure why people have these expectations of the people on YouTube, of their investment advisors, or anybody, which is why they need to do their own research. Now, that being said, I still like United Healthcare. Again, I don't know that I'd really be buying it here, but I'm sure not selling it. Like, when I bought it where I did, it was for a long term trade that I'm hoping in 3 or maybe even 4, possibly even 5 or 10 years down the line, the stock will have continued to grow. They will have done really well. The dividend will continue to increase, and I'll be really happy that I was able to purchase it at a discounted price. Still thinking that it's discounted here, but having a tougher time banging my hands on the table because of the runs that it's already had. Which brings me to the next one, which was Apple, which, what a disappointment to me. Like, maybe I was expecting too much, but time and time again, as they've been updating the phone, there really hasn't been that much ingenuity. Sure, they're going to make it thinner. I guess that it's interesting. Maybe that brings more buyers to the table and gets people a little bit more interested in it. But they haven't done anything innovative of recent. And their competitors, in my opinion, are really pulling ahead. The fold phones that not only does, I think it's Samsung that has it, but Huawei are really cool. How come Apple can't seem to be able to do these things and push along when they've got plenty of cash, plenty of good engineers, and everything else to be able to do this stuff? I understand that they have a really good ecosystem, and what I like about the company is when I went and got one of the fold phones and tried to switch, what a pain in the ass it was that I end up returning that and just sticking with Apple because I don't have the time or the patience to try to make those transitions. It's really difficult to get out of their ecosystem. And not only that, I have a bunch of movies that I bought over the years that I have on Apple TV. You can't use them on another device. Now, I can watch them on the TV, they're on my television, and I can get it on Apple TV on the television. But when I tried to switch over to a Samsung and I started doing all the research, I lost all the movies, which I don't think that's right. They're movies that I paid for. I can sign up for Apple TV, I can get the app on the phone, but all of the stuff in my library, you can't access. And I think that's kind of BS of Apple to do. On top of it, like, everything on Apple is so easy with Face ID, and it isn't quite the same on Samsung. You can do the Face ID, but I think I talked about it in another video. I think it's kind of cool if I wake up in the middle of the night and go to use my phone, it still works. That wasn't the case with the Samsung phone. Now, I love the Fold. It's really cool. I'm old. My eyesight sucks. I like the bigger screen, how it opens up. I like that when it's closed, the outer screen had, as far as I was concerned, better graphics than what the iPhone has. Now, maybe I'm wrong technically for those of you who are like, you know, tech people, but as far as I could see from looking at it, it was just more pleasant to look at, and it's a little bit more square, so it takes the entire screen instead of having little spots that are kind of shrunk down like the iPhone does. Either way, I really liked the phone. I just hated the transition. On top of it, every single app, now it's supposed to transfer over smoothly. It does not. Half of the apps, if not more, I think only about 20% of them transferred over. So I'm slowly like transferring the new apps and downloading them. Then I have to remember usernames and passwords and things that automatically get updated in the cloud if you stay in the Apple ecosystem. I don't know if the same thing happens if you try to switch from a Samsung or a Google phone over to Apple if you run into the same problems. But I probably spent 4 or 5 hours the first night. And when I realized I was going to have to spend more time the next day, it was when I brought the Fold back to the AT&T store, said forget it, and went back to my iPhone. Now, I wish that it was easier and I wish I could use the Fold because, quite honestly, I thought it was a great phone. And I hope that Apple's able to kind of start coming out with one instead of the new 17 that essentially is thinner. And they put on a nice presentation that made it seem more impressive than it is, in my humble opinion. And then lastly, I wanted to talk about the thing that was interesting to me, which is Jamie Dimon mentioning that the economy's slowing. I think he's right. At the same time, it's pretty interesting that the stock market took it in stride and just seems to be going higher, which tells me those two are divergent things. It doesn't necessarily mean that earnings are going to get worse for a company like Amazon or Google or Meta. They might, and I agree with him. It seems to me that things are beginning to slow. And if I go to the international side of things, China is having a real economy correction. Some other countries have slowed. When we were in South Korea, the people who have the vending, like that were out on the streets at the main place selling their goods, was saying how much slower it was and how they were struggling. So I think it's not just in the US. I think the world is slowing down, and I think we could hit some stagflation. What I worry about in terms of investing is one of two things. Either the small companies are going to struggle more and more, and the big ones are continue to drive earnings, and they continue to go higher. Well, it puts a lot of smaller businesses out of business. That would not be an overall good. The other thing that I worry about, and I hate to admit, have hope for, because I think I have an ability to trade it, is to see a melt up when earnings are not getting better, driving prices to be really out of whack of what they should be, pushing the markets extremely higher, drawing people in to invest at the wrong time, pushing PE levels, and making things really wrong in terms of valuation models to just simply make it a trade, suck everybody in before we have a real correction. I don't know that either of those things are going to happen. I do think Jamie Dimon is probably accurate and has a lot of ability to see things going on behind the scenes that none of us really have access to, which tells me things are slowing. I'm guessing he's seeing credit card debt go higher, payments beginning to fall behind, maybe even mortgages and whatever else that he sees on his end. But I wouldn't overthink it, which is why the markets aren't really reacting to it. The other thing is Jamie Dimon, when he's made his comments, have been really wrong in the past. As much as he's had his opinions, every time if you go back to what he talks about, it's been really wrong. So who knows if there's like a motivation behind it or what's going on. I just say I kind of agree with it because from my vantage point, it feels like things are slowing a bit. When I go out to restaurants, it isn't the wait that it was even 6 months ago. I have friends in their jobs that are talking about how much slower it is than it was back in February or March. And I think that's kind of throughout, at least here in Las Vegas. And my guess is if you go across the country, same type of thing. That doesn't mean people are really losing jobs yet. Now, the unemployment ticked up a little, and people are staying at jobs longer, and they're not making the transitions they were, which all fits in line with potentially slowing down. What I would be careful about is the markets are going to get excited about the Fed cutting rates, but the market is like a big steamship, is the way I think about it. It doesn't like turn on a dime the way that some things do. So it isn't necessarily that great news that they're able to cut. Now, we might have a soft landing like they've talked about and hoped for, but who knows? We could go back to the hard landing that they were worried about back in 2022. Things don't happen the way you expect. It's very hard to predict. I don't know what to expect going forward. I will tell you that it seems like things in the real estate business have picked up a little bit. The rates haven't even dropped yet. I mean, they've dropped the past few days, but things seem to be picking up while things were still rates were higher and everything else. So it's just an interesting time. And I don't know that that means any big crash. I don't know what it would mean with the markets, but I think he's probably accurate. As the Fed cuts, are they able to create a soft landing? Do we have stagflation? Or are they too late and we're going to have a real correction? I mean, I see these videos with people in the comments talking about the world is ending and we're going to have a huge crash. I still say if you can put money away, invest either way and don't try to make that guess. If we have a big correction, hopefully you're in the position to continue to invest and work your way through it. And this time is never the same as last time. Things all are always different. That doesn't mean markets aren't always markets. Markets do whatever they do. You can't predict them the way people hope, which is why the other reason, don't be listening to these people who talk about 80% returns, 100% returns, and how trading options is just free money. I hope you had opportunity to watch the videos I posted about why it's not free money. Like, things don't go how they tell you they always will. You can sell puts and things can just blow right through them and really cost you a lot. You can sell covered calls and lose out a lot of the upside. The only time they're free money, so to speak, is if you really plan to buy something at a certain price or sell something at a certain price, and you're happy to sell the put because who cares if it blows through it. I was going to put a limit order, good till cancer to buy cancer, good till cancel, to buy whatever stock it was at whatever price it was. So it doesn't matter to me how low the stock goes. I was ready to buy it, and I'll take that extra money and I will consider it free money, or vice versa on the sell side, that I was willing to sell whatever stock it is at whatever price it was that I was willing to sell it at. And if it blows right through it and goes straight above it, who cares, because I was going to sell it the other way. The only risk you're taking in those scenarios is that it breaches your price point, then reverses and goes back to the mean, and you end up not getting filled where you wanted to buy or you wanted to sell. For me personally, at this stage, I'm kind of waiting to see if there's another bargain that comes around, like a United Healthcare. There's not too many that look super attractive. I'm beginning to think we're getting stretched to where the tech is getting pricey, and there's some things like a Verizon or Conagra, which I've talked about a little bit. Some of those dividend companies that are getting neglected, maybe they're a good opportunity, but nothing is glaring at me where I'm just dying to do it. Um, so no banging the hands on the table right now. Anyway, have a great Tuesday. I'm going to go back to watching the markets and seeing how they react to the stuff from Apple that I thought was kind of stupid. I mean, maybe you guys liked it. I know they have some new AirPods in the watch and whatever. So I'm curious how the stock reacts to it. If you could do me a favor, if you haven't already, and hit that subscribe button, smash the like button, and by all means, if you have a second or two to make a comment in the comment section, let me know what you think. Are there stocks you're looking at that you're looking to buy? Are there things that you're looking to sell? Are you raising cash on the sidelines? Or are you hog wild all in? Like, I'm curious how everybody's doing, and I like the conversation. So have a great day, and I'll try to post again tomorrow if I have some time.